All right, to continue this conversation, we're joined by Gardner, Russo, Quinn managing member Tom Russo, who's, of course, a longtime Berkshire investor. Tom, great to see you again here. Talk to us. What would you like to hear from Warren Buffett this weekend?
Well, I'd like to hear, obviously, as Sam suggested, the observation about equity values in general. That'll be of interest. But for me, I come mainly to hear Charlie and Warren interact, because that's where genius is revealed, and you will take away from those conversations messages that you can employ and build into your own investing strategy and approach. So for me, the very first reason to come is to hear Warren and Charlie back and forth. Now that conversation's expanded with two new members on the dais, and then possibly more going forward. But that conversation, the high level conversation, and generally speaking, the stuff that really matters is stuff about values and culture. And that's what sets Berkshire apart from other companies, is that the culture is such that the people who make investment decisions for subsidiaries have relatively strong autonomy, and they work closely with Warren and Charlie if and when they confront the number one challenge that the managers have, which is how do they deploy the internal cash flow that they generate such abundant amounts of. And in deploying that money, we hear from Warren and Charlie during the conference, the sort of things that they think about today as it influences where they deploy capital. And so, I mean, the number one message, culture of the firm. Number two, what do the managers do with the free cash when they're done each year? They send it up to Omaha, and then what happens with that? It's deployed into new and exciting investments. And the other thing I'd say is Warren holds forth a practice of treating all of the investors as partners, and they actually moved the event to Saturday at some point years ago. I've been coming to the event almost for 30 years. But years ago, they moved it because they wanted to make sure that anything that was market moving gave the entire market a fair chance to process over the weekend, so people weren't pressed to act during the week. But Berkshire is very focused on expressing and showing examples of how they care for us, the investors, as we meet our duty, which is to try to figure out what the portfolio of holdings is worth overall, and then to assess the value of the company versus that value that you derive. And Berkshire uses this occasion to communicate hard fact numbers about what businesses are worth within the company.
Tom, as you mentioned, you've been a shareholder for a long time. You've been going to the meeting for a long time. You mentioned you want to hear potentially about new and exciting investments. Do you think now that Warren and Charlie are open enough to new and exciting investments because of some of the fresh blood that they have brought into the company? I mean, we know, the Apple reluctance initially and then came around. We know some comments that they have made on cryptocurrencies. Do you think that they have that fresh enough perspective now?
It's been amazing ever since I started to come. Warren, early days, decried the inability for his investment style to embrace technology because of its inherent short shelf life and the need to reinvest. And so that was the message. But somehow, as that message was articulated quietly, they built a $31 billion stake in Apple, which is today worth over $150 billion. It's unbelievable. For somebody who will say that they were slow off the start for technology, that's a pretty good outcome, to buy the leading company at such scale and to hold it as well as we have now at Berkshire. So I think there are hosts of other businesses. There's some geographic reach that's underway at the moment. Berkshire's been making investments internationally with more frequency. The number one strength of Berkshire is that Warren Buffett, as he sets about his own work, believes that he has the ability to do anything in the investment business, and he showed us that by all the steps that he's taken over the decades. But he's able to do nothing. He's able to do nothing for extremely long periods of time, and that gives him extraordinary power. And he's not forced to swing at any pitch. He waits for the perfect pitch. Yep. And that's what we come to hear. We'd much rather hear him say, I'm waiting for the perfect pitch, than I think I'm going to go off into direct investments in cryptocurrency.
Tom, once Warren Buffett leaves Berkshire Hathaway, will you sell your stock?
No. I mean,
Why?
There's so many internal advantages. One of the beauties of this business is that Warren has assembled 100 different management teams that have carefully loved businesses that are now inside the Berkshire fold. They continue to carefully love those businesses. They continue to drive those businesses, and they have the tools to do so which advantage them as they reinvest. One of the things that the companies don't have to do is they don't have to deploy the spare cash that ends up in their till each year. They send that up to Omaha, and Warren finds the best place to move it around. So if you manage Shaw Carpets, or if you manage MyTech Business Systems, and you end up with lots of money, you as an operator don't have to deploy that, and it goes up into Berkshire without any taxes, and then it goes to underwrite the growth and development of the most promising investment available. That's an extraordinary structure, and with Warren's ability to help direct attention as to what the possibilities of risk and reward are in such investments, I think the failure rate over decades I've watched Berkshire unfold is so much lower than the failure rate of investors, companies that deploy capital for reasons that aren't as sharply focused on building wealth as Warren Buffett has sharply focused his attention.
And Tom, just quickly here, we're going into what looks like an economically rocky period. We just heard Sam Rowe talking about how Warren Buffett doesn't pay attention to economists in the context of picking companies. So are you feeling pretty good about the next couple of years for Berkshire Hathaway, even as we've got lots of inflation and the economy set to slow?
I feel very comfortable having $150 billion of cash on the balance sheet of Berkshire Hathaway, with a newly enthused willingness to buy back shares if he finds that there aren't adequate opportunities. And we bought back almost $30 billion worth of shares over the course of just a couple of years. So fortress balance sheet, extraordinary judgment into what to deploy that money into, businesses that largely have the capacity to reinvest. And he has a team, both Ted and Todd, extraordinary investors, and they certainly stand ready to lift ever larger burden. The operating side obviously is full of stars in each of the divisions, and I think that the incentives that are inside Berkshire are the least burdened by agency costs and most suggestive of an alignment of interest between our long-term needs as investors and the company's plans.
Tom, I hope you have a fantastic time over the weekend. Hope you run into Sam Rowe as well.
Thank you.
Really good to catch up with you. Really great insight from a longtime shareholder of Berkshire Hathaway, Tom Russo of Gardner, Russo and Quinn. Thank you so much, Tom.